What just happened to silver? Events are unfolding that may send Bitcoin's price parabolic very soon.
And Iran is the latest country to use cryptos.
The Iranian rial is now trading at around 1,429,500 to the US dollar.
Can economics do what conflict couldn't for years?
The country's currency, the rial, has crashed to a record low.
Silver didn't climb past $90 an ounce. It exploded there. We're talking about a metal that sat below $80 on Friday, hitting $91 by Monday. A move that should have taken years compressed into days. But here's what makes this terrifying. It's not alone. Copper just carved out fresh all-time highs, surging 40% in half a year. Gold keeps breaking records, stocks at unprecedented levels. Even money market funds, supposedly the safest, most boring place to park cash, are hitting historic peaks. When everything rallies simultaneously, you're not watching a bull market. You're watching a medical examiner's report on a dying currency. The US Mint just suspended silver coin sales entirely. They literally ran out. And before you tell me this is just supply chain issues, let me show you why that's nonsense. While government officials parade inflation statistics showing everything's under control, the money supply quietly expanded by $1.65 trillion over 12 months. That's $116 billion every single month, printed, injected, debased into existence. Now the Federal Reserve is trapped. Producer prices just re-accelerated, forcing them to reconsider rate cuts. Jerome Powell finds himself in an impossible position, and the incoming administration isn't going to appreciate what happens next. Bitcoin already flipped silver's market cap once. It's preparing to do it again. And when it does, calling it a rally will be like calling a tsunami a wave. While global banking institutions scramble to prop up a collapsing system, the biggest middle finger in financial history is quietly preparing to go vertical. Here's an uncomfortable truth that needs to be said. The Federal Reserve has never been independent. Not really. Not when you're managing a $38 trillion debt addiction for a country that can't stop spending. Think about that for a second. When your debt to GDP crosses 120%, when interest expense devours all receipts, the Federal Reserve isn't setting monetary policy anymore. It's defining foreign policy, economic strategy, and national defense capability through interest rate decisions. If you made it this far in the video, please like and subscribe to the channel so we can continue to bring you quality content on the market. Michael Saylor has an interesting thought experiment. What if you woke up tomorrow and Bitcoin was trading at $10 million? According to him, volatility is a gift to the faithful. It scares away tourists and the already rich, while giving young people with more time than money their greatest advantage. Here's the brutal reality. If everyone understood what Bitcoin maximalists understand and agreed with them, Bitcoin would hit $10 million overnight. And if that happened tomorrow, you'd lose 20 years of accumulation opportunity. Gone. The difference between $100,000 and $10 million? That's what disappears when volatility dies and mass agreement arrives. This is Max Pain theory. If Bitcoin shoots to $1 million rapidly, it creates maximum pain for 8 billion people who won't be able to acquire meaningful amounts. The ultra-wealthy will absorb available supply, and regular people end up earning Bitcoin at $1 million per coin. This exact scenario just unfolded in Iran. The currency collapsed overnight while Bitcoin hit 100 billion rials. Iranians who saved in Bitcoin became wealthy in an instant. Those who trusted government assurances? They lost 96% of their life savings. Maybe you think it can't happen here. Maybe I'm cynical after living through 2008. But fiat currencies don't fail gradually. They fail spectacularly, and they're backed by nothing except government promises and public faith in institutions. Take an honest look around. Faith in American institutions is evaporating at remarkable speed. Bitcoin has never been more critical for wealth preservation, especially when Treasury Secretary Scott Bessent just revealed something stunning. Up to 10% of the federal budget is stolen every year, which raises an obvious question. Why exactly are we paying taxes? Minnesota likely represents the most egregious case, though maybe not. California, Illinois, New York, with their massive populations, what's happening in Minnesota is probably just a microcosm of nationwide fraud. Benefits have transformed into businesses. There's a cottage industry teaching people how to form multiple LLCs, game the system, move money through complex structures. Let's establish perspective on this unconscionable situation. The United States operates the largest budget on Earth, approximately $6 trillion. The amount lost to fraud? Over $1.5 trillion. Add debt service, another trillion, and you're approaching half the total spending. That's more than any other country's entire budget except China, and it's just for fraud and interest payments. The catalysts for Bitcoin's coming decade are converging rapidly. Bitwise, which manages a $15 billion Bitcoin ETF, predicted 2026 would be positive despite most analysts expecting a down year. They see multi-year tailwinds driving Bitcoin higher this year, next year, and throughout the next decade. Institutional adoption leads the charge. When ETFs launched in January 2024, Bitcoin traded around $35,000 to $40,000. Today it's near $90,000. That's institutional buying power at work, allocating 1%, 2%, 3%, 5% of portfolios to Bitcoin. And this is just beginning. The recent quantum computing panic, supercomputers will nuke Bitcoin to zero, came from engagement farmers, not experts. Bitcoin is the world's most valuable asset. Millions of eyes watch the code 24/7. Too many major players have too much invested to let frivolous threats materialize. Ignore the noise. Adopt freedom technology and let it do the rest. Why is the United States suddenly bullish on Bitcoin? It's necessity, not choice. Nobody's buying treasuries anymore. The world is moving away from the dollar, BRICS countries especially, and traditional buyers face their own economic troubles. $38 trillion in debt isn't something you can ignore much longer. Building a substantial Bitcoin reserve becomes necessary to mitigate that debt. The United States is effectively bankrupt, and who wants to own more of that debt? Senator Cynthia Lummis sees this crystal clear. She frames the strategic Bitcoin reserve as how one generation makes amends to the next, how America escapes its debt trap. Paraguay is losing 1,200 to 1,400 Bitcoin annually from wasted hydroelectric capacity. Canada has massive hydropower either run off or sold at deep discounts to the United States. Many countries have excess or untapped energy they could easily harness, just as Middle Eastern nations tap oil reserves. So here's your choice. Position yourself now, while Bitcoin is expensive at $90,000, or wait until the spectacular failure is obvious to everyone. Just remember, once it's obvious, that 20-year accumulation window slams shut overnight. The Iranians learned this lesson last week. How long until it's your turn? At Market Media, your opinion matters to us. Share your story in the comments below. Don't forget to subscribe and like the video.